Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of May 27th. Just a reminder, it is a U.S. holiday on the 27th, so U.S. stock exchanges are closed. Canadian markets are open. Bitcoin, of course, is open and trading as always. So let's get to it. It's interesting conditions out there. I would say it's back to mediocre mixed conditions, and when it's mediocre mixed, I don't take long trades or short trades. So in this article we'll discuss why what would have to happen to get me back to buying. If you're ever wondering where this article is, you can access some of these links. You can go to the stock market analysis and trade section, and you'll see this stock market outlook there updated each week. So let's look at the indices, and we've discussed in prior weeks, we had this very nice run up into late February, and then it started to get a little choppy, and then we had this bigger decline. You can see that was the biggest decline we'd had during this rally. When that happens, there is a tendency for price action to get choppy. So if we looked at individual stocks, you might have these, little 5% pullbacks or something. And then if you get like a 15% pullback, that tells you something. That says a lot of sellers came in, buyers maybe lost their conviction, and like someone kind of falling down a long flight of stairs, they don't often bounce back immediately. So what happens is you can get this choppy period, and we're testing that right now. The market's trying to determine, are we going to be choppy or are we going to continue going higher? So you can see we've kind of had this little bit of a stall out here, a little more obvious on the Russell 2000 and the NYSE Composite, a pretty hard sell-off once we got to that prior high. S&P, NASDAQ not looking as bad, but you can see this kind of consolidation. So right now I'm looking at this as, if we don't drop much more and we can clear above these recent highs, that would indicate more uptrending behavior, right? Because now, we've had this little pullback and we continue moving up. And on these major indices, we are above that prior high. So that would indicate good uptrending movement. If we continue lower, then that choppiness scenario is in play, and this begins to look like it was just a false breakout to the upside, where we just pushed a little bit above it, but there was no buying momentum above it, right? So the buyers stalled out pretty quick here once we moved past these prior highs, especially on, these other indices that include more stocks. So if the fact that it already stalled out, not ideal, but if it continues higher, great. And if it starts pulling back more, I don't like that. I'm not going to trade. I'll just stay out until we start to see something that doesn't look like it could be choppiness to me and looks like better uptrending behavior, which is higher swing highs, higher swing lows, without this, kind of getting stuck near this prior high. Let's talk a little bit about Bitcoin. It's had this, beautiful rally here and discussed for quite a number of months now what tends to happen near prior highs after a big decline. So the Bitcoin got back to its prior high near 69,000 after a huge decline. There's usually some choppiness that follows that, at least a month, often more, or could be more. And we're in that now, and we've had... we had this little sell-off, little false breakout below all these lows. Now we're trying to recover. I still like this big picture. Take from that what you will. Gold miners, gold. Again, I don't mind the big picture, but it's ugly. We also have this scenario which we kind of discussed with the stock indices. This is pretty early in the uptrend, so I would say it's, this uptrend still kind of establishing itself. But you had a very nice, tight, small pullback here. That to me, that shows, sellers couldn't get much of a grasp in the market. Then you had a nice run higher following that. And then you have this bigger decline. remember, bigger declines can lead to choppiness or further declines, because it shows big declines often can start bear markets. So you have this bigger decline, and same thing here in gold. It gets that prior high and just gets rejected. So, some possibility of choppiness. This did break out of some really long-term patterns, like multi-year patterns, which are not shown on this chart. So big picture, maybe gold's okay. Maybe the gold miners are okay. But I just don't love this whipsawy action it's been giving us. Like, it was there before, but you kind of hope, like, once it starts breaking out of this area, it's gonna go on another run, and then it just gets smacked back again. So I don't love it. If there is an individual gold stock which is moving really nicely, then maybe consider trading it. But I don't know, for me, I like going in when it's kind of easy money patterns and things that I understand, and this is just really whipsawy and not my favorite. Let's look at the market health indicators. This is kind of looking more under the hood of the stock market. We already discussed this price action here. Really, this kind of just shows that little consolidation we're in. If we break higher, that's probably a pretty good sign. If we break lower, probably not. Staying out. Volume, not really important to me at the moment. The rate of change is simply the daily percentage movement of the S&P 500. And what we're looking for is just small values indicate uptrending behavior. Big values, especially the minus 2% in a day, indicate bearish, downtrending, choppy conditions. You can see we have been in bull market mode for a very long time. No 2% drops in many months. But if you go back here to 2022, if you remember, that was pretty bearish. You had lots of these 2% down days. Lots more volatility. Big up days, big down days. Whereas, these uptrending periods are actually characterized by smaller daily movement. Kind of boring movement, you could say. And that's basically what we want for an uptrending market. And we haven't had any of those big 2% down days. This is not a prediction. We, of course, could have one tomorrow or the next day. We don't know. But when they occur, I back off. But as we've discussed, some current conditions already have me backed off anyway. But yeah, that would be a bad sign if we start getting those 2% drops. If we continue to see this kind of smaller daily movement, that's generally good for the bull market continuing. The advanced decline line is NYSE advancing stocks minus declining stocks as a cumulative number, and it is moving up along with the S&P 500, so basically just confirming what the S&P is doing, not really providing us a whole lot of insight, but sometimes it will move a different direction than the indices, and that helps give us some insight into whether that move in the indices is likely sustainable or not. Nothing going on here. This is up volume divided by total volume. We're looking for extreme values. It has to reach this upper black line or this lower black line. A few of these look close, but not really that close. So those are nothing signals. So no recent information on this. We're just kind of having what we would call normal volume, nothing extreme, because when it reaches these extreme levels, like these upper ones, it shows extreme buying interest, which is a good sign, or extreme selling interest, which is a bad sign, because those are often the starts of major up moves or down moves. Extreme highs, extreme increases in volume, usually being bullish, and extreme bearish readings being bearish. And we haven't had any of those recently. This is how many stocks are above the percentage of stocks above their 50-day moving average. The red line, I did switch this from last week to go back more to the colors I had set up over the prior years. Red is the S&P 500. The bluish turquoise is all U.S. stocks. And you can see we're hovering right around 50% on both of them. So that means only about 50% of stocks are above their 50-day moving average. Think of it the other way, 50% of stocks are below their 50-day moving average. If you are a trend following type trader like I generally am, it is going to be generally easier to make money when most stocks are in uptrends. The 50-day moving average, just a very crude measure of whether a stock's in an uptrend or not. So the fact that we're kind of at 50, it's like, okay. But if you think of it kind of like probabilities, like a coin flip, if you were to pick a random stock right now, kind of half of them are going up, half of them are going down. If you have 60-70% of stocks above their 50-day moving average, you pick a random stock, well, 70% are going up, 30% are going down. Your odds are a little bit better, even kind of with not a great method of making money. So it's generally just easier to make money on the long side when we have more than 50% of stocks above their 50-day moving average. Sectors on the move. Technology, communication services, I would say those are the main ones over the last week. Technology was the best. Communication services up there in the top. Technology, communication services, the tops over the last month. And communication services up there over the last 3 months. Technology a little bit off, still in the top 4 though. We had talked about the utilities. That was kind of an interesting one to me, like looking up at utility stocks. They're so strong. These like great bull markets, and I don't usually look at utility stocks because they don't move a lot, and they tend to do better toward the end of major rallies or once the market tends to, when the market is rolling over, utility stocks are very strong. So that was a little bit of a kind of, let's call it a yellow flag, where I was just like, that's interesting. Utilities have been super strong at a time when I was kind of thinking the market might get a little choppy there. Anyway, side note. So what am I doing right now? I still like the Bitcoin bigger picture. Gold and GDX looking probably still okay big picture, but I really don't like that whipsawiness, and if it's not easy money, like I said, I'm usually going to stay out. Stock swing trades, I've barely traded much in a long time, like going back to February, because around March it started to get a little bit choppier, and just haven't seen as much I liked. Missed out on the little rally recently where we've rallied off these pullback lows, so did miss maybe some opportunities there. But at the same time, if I would have been more aggressive during any of these other times, I probably would have lost some money once this decline started. And then early in this decline it was kind of choppy, and then in March it was a little choppy. So overall, I feel okay about being pretty inactive the last several months. And going forward, if we start breaking higher on these indices, then I'm more inclined to get involved. If we just kind of chop around here or head lower, I will stay out. So that is your outlook for the week of May 27th. If you're in the US, have a great holiday.